investors' powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. Well, today we're talking about Aptus Value Housing Finance Company, and as the name suggests, it is essentially into housing finance. Well, this is an NBFC. It's a relatively smaller NBFC, at least in terms of market capitalization with respect to several others, but it does seem like it has done its part in terms of growth of late. That said, let's take a look at how things have panned out and what the company in fact does. So, of course, it offers loans for home construction, home purchase, renovations, as well as home extensions, and it's focused on self-employed, low and middle income families, primarily from semi-urban areas and rural areas. And that perhaps, at this point in time, it does look like it has its strategy in place, and what kind of markets it wants to target and what kind of clientele it's looking for, what kind of borrowers it is looking to focus and target as well. Now, the average ticket size for this particular company is about 10 lakhs. So the sum itself is also not significantly large. And, a lot of the targets here will likely have a ticket size of less than just 10 lakh rupees. But in terms of product mix, how does that pan out? Now, at the end of the third quarter of this financial year, if you consider how things were in terms of your loan, well, 61% of your home loans, rather 61% of your revenues, or rather your loan mix was home loans, and that was followed by another 21%, which is small business loans, and quasi-home loans comprise about 14%. So that's as far as your split's concerned. What geographies are they in? But they are in 6 states currently, in one union territory, and they have a little less than 300 branches. 298 to be precise is where the number of branches is, and it has seen a significant shift in the number of customers it has catered to since FY20. In the last, well, a little less than 5 years, it has seen its customers move from a little less than 44,000 all the way to well over 1,52,000 customers. So, like I said, it has seen a lot of growth, even in terms of your branches, which has gone from 175 back in the end of FY20 all the way to 298 precisely at the end of the 9 months ended, FY25. So this is as far as the company is concerned. We do know that Aptus Value is in a space which is there's a lot of competition here. Now, this is a 15,000 crore market capitalization company, so and there are plenty out there in terms of competition. It's something that we're going to address as well a little later on in the show. But for now, this is what the company does, and this is to give you an idea about how things have panned out. Now, as we always do, we take a look at the fundamentals of all these companies and see how things have, in fact, panned out for the company in terms of your income statement, your balance sheet, your operational metrics, as well as asset quality. These are some of the most important aspects as far as an NBFC is concerned, an NBFC catering to housing finance is concerned. But moving on, we look beyond and we take a look at shareholding as well, valuations, street credentials, as well as street coverage too, to give you a better idea of how the company has done and has panned out. Well, in order to do that, as usual, I am joined by Harsh, who's also going to help us shed more light into what the company has been doing of late. So Harsh, good morning and thanks for joining in. I reckon that income statement, as usual, will be the good place to start off with.
Yeah, absolutely, Agam. Largely when you're looking at the kind of trajectory that the UM has taken, it's roughly a 30% kind of CAGR that they've done over the last 5 years. And I'm just trying to zoom out a little bit here, just for better context. And net interest income growth also equally healthy. We've seen a 28% growth both on NII as well as profit after tax when I'm looking at the 2-year CAGR of this company, or near 3-year CAGR as well. So healthily placed on that count where the growth numbers are concerned. The trajectory looks good. A little bit on the OPEX front, you've seen OPEX grow at around 25% despite top line growing at 30-odd%. And therefore, you're seeing a little bit of OPEX play also starting to play out on that P&L number, on the profitability metric. So just those couple of things to be kept in mind. How much will that ramp up happen, etc., will also be interesting to understand. But yeah, that's how it is.
Okay, so well, pretty healthy income statement from what we see and what we can make out. So it's certainly a thumbs up there. I'll quickly take you through the balance sheet, and perhaps Harsh can give us a little bit more color on the balance sheet as well. But, well, they have seen their AUM grow. This is, of course, unexpected lines because back in FY22, they had an AUM of around, well, you know, little less than 5,200 crores, has grown to 10,266 crores to be precise right now. In terms of their borrowing as well, moving in tandem from 2,700 crores all the way to little less than 6,500 crores. And this particular number is perhaps something what Harsh can shed light on, also give us the full formula. So, yeah, what do you can tell us about this?
Yeah, it's the capital and risk-weighted assets ratio, which generally typically determines how well capitalized the company is. Of course, all NBFCs and banks need to have adequate capitalization, and generally that's between the range of around 15 to 20% and 20 to 25% for certain fast-growing NBFCs. This one is sitting at 65% and therefore very well capitalized, at least in the medium term. It's of course growing at a healthy clip as well. But that capital ratio of 65% just kind of signifies that there is just adequate room available for it to grow.
Right. So no concerns about the fact that it has moved from 81% to 65% because other than that, ratios in general are sub 25%.
That's correct.
Okay, so there you have it, which is why we're giving this the balance sheet, you know, a thumbs up as well. But what about the other key operating metrics, Harsh? What can you tell us there?
Well, yeah. So when you're looking at your margin number,